your wealth, live on your terms. Hi there, Millen Livis is here, and today I'll talk about possibility to grow your wealth with stock market investing. As I'm sure you know, stock market is not the only way to invest your money so it works for you. However, since the stock market investing is a popular, easily available, and common form of investing, today I want to look closer at how scary the investing in the stock market really is, historically. I've done a bit of research, and here's what I found. On January 1st, year 2000, the value of the S&P 500 index, one of the indicators of the US stock market performance, was about 1,426, rounded. And despite all kinds of market corrections, including most recent COVID-19 market shock, on May 27, 2020, the value of the S&P 500 index was about 3,005, which means it doubled in value since 2000, after all the corrections. So over the last 80 plus years, the stock market has returned on average of about 7 to 9% annually to the investors. Some years are really bad, that's what we fear. But on average, the long-term returns are pretty good. Let's look at the hypothetical example here. Let's say a risk-averse investor buys low-yielding but relatively safe investments like a certificate of deposit, CD, or short-term bonds that return about 4% annually. After 30 years of investing $10,000 per year, the risk-averse investor in this example, who is earning 4% interest annually, will have about $583,000 after 30 years. Now let's compare this return with a risk-embracing investor who buys stocks that average 9% per year. After 30 years, the stock investor will have about $1,486,000, which is about double the return of the risk-averse investor. So here's the thing. While being prudent with your investment strategies is super important indeed, the CD bond investor in this example may get far short of their retirement goals due to being too conservative. And if you think that keeping all your money in cash is a safe strategy to create lasting wealth, I invite you to consider the growth of your cash portfolio, which will be negative over the long term because of inevitable inflation after years of printing paper money and out of control government's debt. So I invite you to remember that inflation erodes the purchasing power of your money. So investing in assets that get adjusted with inflation is important. Again, historically, the stock market has been one of the better bets if you want to grow your wealth over the long term. However, always remember, that it's not wise to invest all your money in any one asset. That's why asset allocation, according to the economic environment and your situation, is the key to successful investing. Thank you for watching. See you next week with another wealth building tips and strategies video. Grow your wealth, live on your terms.